Okay, let's unpack this. We are diving deep into an industry, the multi-level marketing space, that, it often faces some really intense scrutiny.
It really does.
And I think most people, when they hear about a company in this sector failing, they assume it's the product or maybe, flawed compensation plan.
Right, the usual
But
suspects.
what if the real silent killer wasn't any of that? What if it was a financial foundation that was just, structurally broken from day one?
That is the crucial realization in all the sources we've looked at today. The core argument is, it's really specific. It says, most of these companies struggle because the traditional financial infrastructure they're forced to
I
use.
mean, like Visa, MasterCard?
Exactly. Visa, MasterCard, the ancient ACH system,
Yeah.
none of them were ever designed for this unique, high-velocity, high-commission business model.
It's like trying to fit a square peg into a round hole.
It is, and that mismatch creates systemic instability. It's almost guaranteed to cause problems down the line.
And that instability, that constant threat, is precisely what the sources claim SatsPay is designed to solve. We're talking about a closed-loop financial operating system built from the ground up to eliminate those weak points.
Exactly. So our mission for this deep dive is to really get into the mechanics. How does SatsPay replace those fragile external systems with a stable internal ledger?
Right.
Because that fundamental shift, it promises a level of financial predictability that this industry has, well, it's simply never known before. It's the difference between building on sand and building on bedrock.
So let's start there with the pain points. For anyone out there running a direct sales company, you are constantly living under the threat of some external financial control. I want you to really feel the daily anxiety here. What are the specific risks we're talking about?
Oh, the list is. It's pretty devastating. And these problems hit cash flow and trust at the same time. You're constantly dealing with the threat of your merchant account being shut down.
Which is catastrophic, right?
Yeah.
Overnight, you just can't take payments.
Game over. And then there are the rolling reserves.
Okay, let's pause on that one. Rolling reserves. That's some deep industry jargon. Can you break that down for us? What does that actually mean?
Sure. Think of it as your payment processor basically saying, hey, we don't fully trust your business model yet. So they might require you to set aside, say, 10 to 15% of your entire revenue.
For how long?
For 6 months, maybe more. And that's revenue you have earned, but you can't touch it. You can't use it for commissions, for operations, for anything.
Because they're holding it as insurance.
Exactly. Insurance against future risk. It's a massive drag on your working capital.
And on top of that, you've got unexpected holds, you've got this huge chargeback exposure, and then the whole headache of cross-border payments every time you expand.
That's right. Plus the little things that add up. An auto ship fails because a card expired, or worse, an ACH reversal. You think a commission is settled, your distributor is counting on that money, and then days later,
The bank just claws it back.
it just disappears. It creates operational chaos, and it erodes trust.
What's so interesting here is your point that this isn't necessarily a company doing something wrong. These aren't ethical failures, they're structural.
Absolutely. The MLM model, with its high volume, its frequent internal commission payouts, and the need for generous refund policies to be compliant, it just flies in the face of the risk models that Visa and MasterCard use.
So when an MLM acts like an MLM, the system automatically flags it as high risk.
It screams high risk to the external system, and SatsPay basically says, okay, that incompatibility is the problem, and it offers a purpose-built solution.
All right, let's talk about that solution, that architecture. How do you actually accept money and pay people without relying on those traditional rails? The core idea in the source is this internal ledger system.
That's the whole game changer. Imagine the company becomes its own little bank just for its own ecosystem.
Okay.
So all the financial actions, customer purchases, commissions, refunds, bonuses, all of it, it happens inside this controlled environment. By taking control of that ledger, the company gets total control over the movement of value.
Which means no more reversals.
No more reversals. Your cash flow is stable from day one.
Now, we have to talk about the tech here. The source material is very clear that this whole platform is powered by Bitcoin technology in the background. And for a lot of people, that's an immediate red flag.
Of course. Complexity, volatility, the idea that you have to become a crypto expert.
Exactly.
And that skepticism is totally valid, which is why the user experience is everything. The sources are adamant on this point. Neither the company nor its distributors have to hold or understand or even see Bitcoin, ever.
So everything is just in dollars.
All balances, all transactions, they're all displayed in normal, familiar dollar amounts.
So if the user only ever sees dollars, why use Bitcoin at all? Why not just build a normal database?
Because Bitcoin tech is the silent, invisible, and frankly superior rail underneath it all. It's the engine, but you're just driving a regular car.
Okay, I like that analogy.
It gives you the things that MLMs desperately need and that banks struggle with. Things like instant settlement, guaranteed irreversible transfers, and true global reach. Traditional networks are slow, they're expensive, they shut down on weekends.
Right.
These rails run 24/7, 365 globally and settle instantly. So the company gets all that next-gen stability without forcing a single distributor to learn about blockchain.
That distinction is so important. So you're swapping out this old, clunky banking architecture for a modern rail, but the customer experience doesn't change.
It doesn't change at all.
So let's jump to the biggest vulnerability this solves.
Right.
Chargebacks. If the transactions are irreversible, how does that eliminate chargebacks entirely?
It's actually quite simple. A chargeback, by definition, requires a bank to reverse a transaction.
Right.
But since these transactions happen on the internal ledger and the value is settled instantly inside that system, there's no way for an external bank or card network to reach in and yank the funds back. It's just not possible.
And that one feature alone creates predictable cash flow.
Instantly. Yes.
Hold on, though. That sounds great for the company, but doesn't that just trade one problem for another? If transfers are irreversible, what about consumer protection? What if a purchase was a genuine mistake?
That is a fantastic and crucial question. The irreversibility is about stopping the external banking system from disrupting your cash flow. Internally, the company still has total control.
I see.
If a customer needs a refund, the company processes it internally on their own ledger. The dispute process becomes an internal, trackable event, not an external financial threat.
Okay, so you remove the external threat, but you keep the internal ability to make things right. That makes sense. And that leads us right to what you call the refund trap.
Yes.
Any ethical MLM has to offer refunds and buybacks for compliance, but doing that very thing makes you look high risk to the processors.
Exactly. The moment your refund ratio starts to tick up, which is normal for a company that's following the rules, the processors panic. They see that as a failure risk, and it triggers flags, higher reserve requirements, or they just shut you down. It's a self-destruct mechanism.
So how does SatsPay let a company be compliant with refunds without, blowing up its own financial foundation?
It completely reframes the action. When a refund is needed, SatsPay processes it as an internal ledger credit, not a processor reversal.
So it never touches the outside world.
It never leaves the closed loop. There's zero notification sent to Visa or MasterCard that a reversal even happened. So no risk is added to the company's profile. A refund just becomes a normal internal accounting function.
That is a profound shift. You're taking a necessary business operation that was a source of existential risk, and you're turning it into a simple, controlled, internal event.
And that frees up so much mental energy for the leadership. They can finally focus on their mission, on their people, instead of constantly playing defense against their own payment processor.
Okay, let's pivot to growth then. Because even with stable cash, another huge friction point is the payout problem. Commission delays.
Ugh, yes. Distributor retention lives and dies on this. If you've ever had to wait 3 days for an ACH payment to clear, or dealt with international wire transfer delays, you know how frustrating that is.
The excitement dies.
The momentum just dies. A distributor earns a bonus, they're fired up, but they don't see the money for 3 banking days. It's a huge letdown.
So the source materials solution here is pretty straightforward. Instant commissions.
It's possible because there's no external bank needed to move the money. It's all on the internal ledger. So bonuses, daily pay, rank rewards, they appear the moment they're earned, in their billfold balance.
Think about the effect on the culture.
Oh, it's massive. Instant payment is instant validation. It accelerates that momentum, especially in those crucial early growth phases when people need that reinforcement.
And beyond the speed, what about the complexity of scaling? As you grow, trying to reconcile thousands of transactions, refunds, commissions across different countries, that has to be an accounting nightmare.
A total nightmare. But here, the closed loop brings incredible transparency. SatsPay gives you these immutable, real-time transaction logs for every single financial event.
So audits get simpler?
Drastically simpler. And disputes are easy to resolve. A distributor questions their commission. You can both look at the exact same verified ledger entry in real time. Everything is traceable, consistent, and internally verified. It's a huge leap forward for compliance.
Okay, so we've covered the plumbing, right? The stability, the instant payouts, no more chargebacks. Now, the source material introduces a growth strategy tool built on top of this, called Shoulders.
Right. And this is where it shifts from just preventing disaster to actively accelerating growth.
So what is Shoulders?
It's fascinating. It uses the ledger's stability to improve the human side of the business. It's
Yeah.
basically a modern digital gifting interface. It takes the oldest customer acquisition method in this industry, giving someone a product sample, and digitizes it.
Which has always been so clunky, right? You have to buy the sample, mail it, then have that awkward follow-up call.
All of that friction is gone. It lets distributors instantly send a digital product gift to a prospect. It's warm, it's simple, and crucially, it's a no-pressure interaction.
So if your friend is complaining about not sleeping well,
You can instantly send them a digital gift for a free sample of a sleep product right to their phone with a nice message. It removes all that salesy awkwardness, and it makes duplication so much easier because the action is just helpful and simple.
and because it's tied to the SatsPay ledger, all of this becomes trackable data.
That's the genius of it. You're turning this old analog gut feel activity into a measurable, scalable experience. Every gift sent is a trackable event. Every time someone redeems that gift, that's a qualified lead for the company. Every share is organic reach.
So the company gets real data on what's actually working in the field?
Exactly. Data-driven insights into what activities are driving the most effective growth.
So if we put this all together, the architectural shift from SatsPay and this growth tool, Shoulders, we're not just talking about a better payment processor. This is a complete modernization of the entire MLM operational strategy.
That's the essential takeaway. This is the new infrastructure. It eliminates the financial threats that have plagued this industry for decades. Processor shutdowns, chargebacks, payout delays, compliance headaches, they're just gone.
Which means the leaders are finally freed up. They can put 100% of their energy into their product, their culture, and just pure growth.
Instead of constantly fighting fires created by an outdated system that was never built for them in the first place.
And that stability, it changes the entire conversation. If you totally eliminate financial vulnerability, what kind of global confidence does that unlock for the whole industry?
It's a massive question, and it leads to a final thought I think we should leave people with.
Go for it.
If that constant threat of financial crisis is gone, what does that do to the organizational culture? If every single person in the field knows, without a shred of doubt, that the company can pay every commission instantly, forever, because the financial system is entirely within its control, what level of long-term belief and stability does that create? And how might that, over time, reshape the perception of the entire sector? That's the shift we need to watch.